Hello, everyone. Good afternoon. Welcome to brand new year uh, Beyond Connections, where investors can ask any questions or any pressing concern about the stock market. So again, a very happy New Year to everyone. And it's been a while since we last saw you guys, and there have been several developments in the market. Although I think at this point in time, not it's not really hasn't been really a thrilling start to the year, but we're still quite hopeful. Uh, I hope you were able to catch our outlook last week or a few weeks ago, and that's the time when we shared our views on our picks for this year and basically our outlook for the market and the industries in general. So while we wait for your questions, maybe IC.
Or let's introduce
Yeah.
ourselves.
Oh, yeah. I forgot to introduce ourselves. So, hi, everyone. Good afternoon again. I'm Rainier, and I am one of the analysts of MyTrade slash Abacus Securities, joined by.
Hello, everyone. Happy New Year and also advanced Happy Chinese New Year. I'm Bess, one of the analysts for Abacus Securities, and we're also joined by our technical analyst.
Good afternoon, everyone. Happy New Year. I'm Isaiah, one of the analysts for MyTrade Atlas. Let us know what charts you want to look at, and I'll show you the charts that I've been looking at as well. So,
So maybe IC, you think we can start with
you want to start with
the
charts?
index? Yeah.
Let's start with how the index has been looking. Uh, so from 2025, you can see that the market has pulled back a bit. Hopefully, it goes back above 6,400 quickly. You can tell that there's a bit of a wedge here. Usually, these are bullish reversals. But another chart you might want to look at is also the all shares index, which includes non-index names. The levels that I'm watching is 3683 needs to hold, and hopefully, for bulls it breaks above 3770 for that more of a bearish pattern to materialize. So those are the levels I'm looking at and its current trajectory.
Okay.
You can add any color to the charts.
So for both the all shares and the main index, what are the support levels that you are seeing that they need for all shares you need to hold six
Yeah, so
index.
36, about 36.
If it breaks that, what's the next one?
It looks like it's going to go to as much as 35, 3578. Hopefully, but hopefully the buyers will step in at about 200-day moving average. So
What about for the main index?
the main index, yeah, it's about the support here at 6,300. If that breaks, then we're gonna look at 6,100.
Quite steep. Sorry, Beth, I think I've been cutting you off. So
No, that I was just going to say the same thing. It's quite a steep fall, so hopefully that holds. Kapit lang, guys. So I think we have our first question from Happy Mommy. Seb CP, please. Not really a question, but a request. Maybe first on a fundamental point of view.
yes, thank you. I think that's a very good start to Beyond Connections. Since ZCP, it is one of our preferred plays when it comes to the aviation stocks because ZCP, I think they should be able to pay dividends starting this year. And as you may recall, they haven't paid any dividends over the past years or since its inception last 2021. So they are due to pay at about 9 pesos worth of shares of dividends by March, and if they aren't able to by March, they will they should be able to pay by September. By then would be at about 10.2, and at 9, that's a yield of about 23%, 24%. Then another 26% if it's delayed again to September. But our prospects for SEB-CP is they are likely to pay dividends this year because of the restructuring that happened last year for SEB that wiped out their retained earnings. So starting this year or beginning the 9 months of last year, they already recorded some retained earnings, and by by the full year, once we see it in March or April, we should see uh, its retained earnings up to a level that should be able to pay dividends not only for the period, not only for the 2025 period, but also the dividend in arrears. So at this point, this is our preferred play because of the yield that is about to be paid out, that is accumulated. Um, but for its principal, which is the step common, it is still currently at depressed levels. It might be dependent or it might be affected by the elevated fuel prices and at the same time the unfavorable forex costs since 60 to 70% of their costs are denominated in USD. So if the USD to peso exchange rate is higher, then the prospects of its costs are could be higher than the previous period. So yeah, that's the outlook basically for SEB and SEBC.
So, just want to add that we want to clarify that the 9 pesos that we are expecting is a basically a one-time deal. After if they are able to pay it either in March, September, the subsequent dividend payouts should be much lower since this will be the first payout and it includes the dividends in arrears, um, or the ones that have been accumulated since it was issued. And after that first payout, it should go down to a more normalized level. So maybe after that is declared, is it? Do you recommend switching to the parent, parent to SEB or maybe to other aviation place?
Well, currently, SEBCP, they are still paying a good set of yield even after they will be able to pay those dividend in arrears. So for those looking beyond the play for SEBCP, then looking if you're gonna switch it na lang into the commons, maybe it's better to hold the preferred since eventually it will be converted into the SEB commons. So I think it's better to hold the preferreds, especially if you're in it for the long haul for the aviation sector, and particularly for SEB. And the SEB actually, SEB itself has a good outlook, especially for the longer term, because of their aircraft plans of I think purchasing or leasing at about 100 to 150 that would replace some of its older aircraft and would add into their fleet. So really, they are putting a uh, writings on the wall that they are bullish on the travel sector, particularly for the Philippines, since as low carrier cost or a low carrier cost, it should be positive for the Filipino travelers as well, since they will be the first or second option among the carriers here in the Philippines. So really, for the longer term, we do believe that SEBCP and SEB will be one of the names that will be profitable in the coming years. Although it is still experiencing some headwinds now, given the cost that we mentioned earlier. I think at current prices, it is really attractive, especially when you compare it to its prospects in the long run. So I think that was a mouthful, and I think we can move on to the next question. And I think the following questions are more of the REITs. So first we have MREIT, then we have RCR, and then Phil REIT. Okay,
And then
maybe.
the more general
Yeah.
question, what with the current from Fernand's? Let's take that first. With the current issue of oversupply of condos, how would these affect the property sector and REITs? This has been the one that has been driving, actually, the news has been the one that's been causing the negative sentiment on the property sector over the past several weeks. Um, but we do want to point out that most of this oversupply is in the rather saturated Metro Manila area. So we still believe that over the course of uh, this year and perhaps even next year, once interest rates start to go down in a more meaningful way with more BSP rate cuts, the demand for properties, especially um, for those that are less uh, oversupplied outside of Metro Manila should be felt more. We are also uh, quite positive or reads also on the fact that most of them are earning or will give you yields that should hold, especially when you compare it to our expectations of lower interest rates or on bonds and other similar fixed instruments. So if you want a more regular um, dividend income, so we are positive on REITs. But specifically, our pick for REITs is C REIT since its its portfolio is more should have a more stable um, source of revenue. I think that really.
Yeah. And just to add, since we did discuss the oversupply of condos, and this is one of the reasons of why the property names are being dragged at this point. And I hope you were able to tune in our market outlook last week, since we did mention that on the property sector, since we aren't discounting this issue, but we do like a couple of names among the property names, and the number one would probably be SM Prime because of its portfolio in the malls. Since there may be it can take some time before the oversupply in Metro Manila condos. And just to highlight that this is, I think this is specifically for the Metro Manila condos. Uh, just to not, we aren't discounting that issue, but uh, the play on SM Prime is because of its mall income or its portfolio in the malls, which is one of the key components of our play in this sector. So, and moving beyond that, when it comes to the REITs, I think we mentioned C-REIT as our topic, but I think there were questions earlier or on RCR, Phil REIT, and MREIT. I think the bigger question here is whether their occupancy rate will continue its uptrend or downtrend, and downtrend specifically for Phil REIT because it is facing a lot of the headwinds in uh, the vacancies in its portfolio in its office portfolio in Ayala in Alabang, and some of its portfolio here in Metro Manila. So our preference among RCR versus MREIT would be RCR because of its asset quality as well. um, since for MREIT, it might be exposed to some of the issues in the POGO market, although they did mention that only a few percentage or a small percentage of it were only affected by the POGO ban. But we're still wary of the potential impact to MREIT. So among the names that were asked here, RCR, PhilREIT, and MREIT, we would prefer RCR. But of course, we maintain our preference for C-REIT because of its weighted average lease effectivity of 21 years compared to the other REITs. And in those 21 years for C-REIT, they maintain an occupancy of 100%. So that's why the sustainability uh, the sustainability and the consistency for the dividends would be tilted more favorable to C-REIT.
And speaking of REITs, although it's not mentioned in the questions, if you have a REIT, we are advising you to hold on to that until maybe by the first week of February, since we are expecting that this will be added to the index next month. And so that the better time to take profits on that would be after the announcement. So just an added info. Next question from stock market trader or comment, mention, shout out, Monday.
Okay.
Monday has had a ride over the past few uh, months na ba? What can you say about Monday? I believe we're so positive on
Yeah.
Monday. Can you elaborate more on why?
Yeah, and thank you for the comment, stock market trader. Glad you are in the market. For Monday, I think these are the beaten stocks of the PSEI, not only Monday, but also its peer, URC. And we don't really know exactly whether it's URC affecting Monday or Monday affecting URC. But between the two, we do prefer Monday over URC because it's domestic business or it's branded business here in the Philippines is doing much better compared to URC. Although the problem, kasi of Monday, lies on its meat alternatives business. It is still encountering some issues on driving demand in the UK, and this is slightly impacting the bottom line for overall Monday. But its domestic business continues to carry the weight. It's still growing at this point, although when you see news articles, Monde may see some negatives because of the one-time impairment charges due to the revaluation in their meat alternatives business. But those are non-cash. So in terms of their business and being able to produce cash flows, it is still at uh, basically it's still doing very well because of their domestic business and its drivers for growth and margin appreciation over the past year and likely to sustain for 2025. That's why we continue to like Monde. And based on the recent raw material prices, since Monde is a heavy user of wheat and palm oil, and based on those price trends, we don't see any headwind for now for Monde, and they are more likely to sustain their margins for at least for the first quarter and probably the second and third quarter of this year. So preference again is on Monde over URC since URC they are encountering some challenges when it comes to driving demand here. They are seeing some down trading that is affecting some of their more discretionary items or products since Monde kasi their price lower, so it has become more favorable, especially in the high inflationary environment. So somehow they benefited from that, and it's likely to continue at least for this year. So maybe we can take a look at the charts since you may see some light.
So quick look at the charts. These are basically Bollinger Bands with about 3 year look back. They've reached about an oversold level now. So typically these kind of bounce back. So the technicals are agreeing with Brainer's view of probably more price advance going forward. So,
Okay, thank you for that. I see.
Okay.
Yeah, maybe we can take the next question.
From JM Padilla, your take on ASEN. I think ASEN is actually one of our topics for 2025. We are expecting the company to be able to increase its attributable capacity this year, also next year, which should be positive for its bottom line. So yeah, we are positive on ASEN. It's one of our topics. And maybe we can also look at the technicals. I see.
Yeah, sorry. Just to add for ASIN, sorry, I see. Before we take a look at the technicals. ASIN kasi, it's also expected that some of its plants will come online this year. So we do see some segments of growth. Not sure which part of the quarter this year, but sometime this year, there could be some delays then kasi. Although I think IC will later will show the price performance of ASEN. I think one of the headwinds, or I think the cap or what investors are seeing for ASEN, they did mention kasi of a potential capital raising activity. So that could be in a form of a share rights offering or FOO or some sort that could potentially dilute some of its shares. That's why maybe some of the investors are taking a more risk averse approach on ACE, and that's why uh, I will explain later. And I think we can take a look at it now. Okay.
So if you're a bottom fisher, funded by like undervalued company with the technicals, you can just use this one was already the price has already been closer to the support, which is about let me just check this. 3 pesos 46. So for those who want to probably wait for a reversal, you can buy close above 423, which would be in classical charting terms would be like a double bottom. So that would mark the reversal for from a trend following perspective, and then for bottom fishing, you can already buy it.
Okay, thank you for that, IC. Although, just to clarify, since they are planning to raise capital again this year, it's not really a bad thing for ASEN. It's actually a more positive outlook for ASEN since they are uh, doing this in order to fund more of their projects and their capital expenditures. I think investors are more ano lang, are more risk averse in case ASIN will be priced at a discount. So, for example, it's trading at 350, it could be priced at 320. So, some investors might be taking a more cautious approach of taking profits now and maybe just buying it later. So, really, that's one of the reasons why we mentioned that that could explain some of its weakness in its share price.
Just also to add, no, we don't expect naman this capital raising to be imminent. We are also seeing slight possibility that this could be delayed even after this year, since ASEN is a shareholder of ERIT and it will be receiving dividends from ERIT, or it could take the alternative capital raising route of even selling its ERIT shares, since it's not really aligned with their core business. Um, so that's one of the reasons also why we are still positive in Ace and E, despite this possibility of capital raising in the near future. Next question from
Just scanning some of the questions here. Please feel free to uh, comment or ask away of any.
from LB de la Cruz, Suki. Our long-time viewer, thoughts on SPNEC and SGP on its recent run. Maybe we
Okay,
can also
yeah.
see a technical side on both of these.
So before I post up the chart, I think for SB Next, there haven't been any new developments apart from its special shareholders meeting yesterday, in which they did disclose that they have secured financing for a portion of their requirements for the Terra Solar project, with the collateral being the SPNet shares. So that's also, well, it's more of a neutral news for us, since it's really somehow expected already that they will get that. But I guess it's more of a indicator that the project is a go regardless of what will happen. So I think it's a year away of being online, so something to anticipate moving forward this year. So I think.
With the price action, the trend has recently turned more up, but remains to be seen if the rally can be sustained.
Okay, thank you. I think maybe for SGP next. SGP has been one of the trending stocks lately. It did move up over the past weeks, even moved up of its previous IPO of 12 pesos. And it's mainly driven by the news that the potential investment by Maharlika. I think it's been reported by various news outlets. Uh, but I think the news has continued to fizzle over the past, at least for today, or over the past 2 days. That's why we could see some comments on SGP's charts. But in the meantime, for SGP, we do think that it will continue to be volatile and will be news driven at this point. Uh, I think.
Sure. So the recent run up just you see the oscillator on the lower panel. It just reached a previous overbought level. It coincided. The price action also coincided with the previous peak. So all these factors coming into play, it was an opportune time for selling pressure to take place.
Yeah, I think when news broke out of the potential NGCP or the Maharlika play, I think it was more of a sell on news, as investors or traders were able to capitalize on that, since it was more or less expected. But I think we would see more of it later on, especially if any deal comes out. Although SGP yesterday they did disclose that they weren't aware of any potential talks of a investment from Maharlika.
We are, however, advising caution on trying um, to ride on SGP, since the valuations that are being reported in the news, we believe, are overly optimistic. Um, yeah. Next question from Ilian Tan. What are your thoughts on SM versus something more property heavy like MPH? Our case for SMPH is more on, not really on its uh, more conventional real estate business, but on a play on the mall side. Um, with our expectation that inflation would remain benign over the near to medium term, consumer spending is still likely to keep driving the economy, which should result which should result in still uh, strong revenue growth for SMPH malls. For SM, this is more of the proxy play for the overall economic growth or performance of the country. And since these two are are the largest weights, or have the largest weights in the index, uh, any news on consumer spending, economic growth front would affect the stock price on an parang more outsized than other stocks that are uh, more specialized. So also, since these are the ones that, as mentioned earlier, that they have the largest weights in the index, anytime that foreigners would um, want to exit from their emerging market investments, which includes Philippines, this would bear the brunt of that movement or that liquidity or volatility. Any technical analysis on this? I see.
So, H.
S&P maybe?
SMPH. So SMPH has been tracking this descending channel for a while now. It is pretty much oversold based on based on both price action and the oscillator on the lower panel. So it would oversold. So you would figure it as a counter trend.
Okay, thank you for that, Icy. And I think it does partly address one of the questions. Do you think S&P overvalued or undervalued? We don't have our código here, but if I remember correctly, it is trading at about two standard deviations below its 10-year mean. So pretty much it is trading at historically low valuations. So it is on the undervalued side. Thank you for the question, Sir Chris. And I think uh, few we have maybe one or two questions left since time is about to run out on us. So best pick question.
Okay, so Pei Ang, your question, Asen, was discussed earlier. Maybe you could backtrack. For Ali, I think that this is uh, more the investors that are still keen on investing in the real estate despite the negative in real estate sector despite the negative news lately are looking to or are looking towards Ali on a safer bet since they are considered to have more high end or higher income customers or buyers, which would be less affected by fluctuations in affordability of of both both on the mall revenue side, but also on the property sales side. So that's why probably you are seeing lower valuations for SMPH compared to Ali, for example. Um, Also, there is a question from JM Sabia again for Tel. Uh, is that the last question? Um, Tel is also one of our topics for 2025. Um, we are expecting a fairly good dividend yield for Tel this year since the its capital expenses are expected to start to go down since it's wrapping up its um, CapEx spending from the past few years. We are also expecting Maya to start contributing positively to profitability of Tel itself, since company expects to be in the black in the fourth quarter 2024. The official numbers of which we should see over the next few weeks. I think lately the news on Tel has been negative since there was some talk that MVP is planning or could be planning to either buy out the rest of the shareholders in Maya or sell Maya altogether, which is quite at the very extreme ends of the possibilities for Maya for Tel's investment in Maya. So either way, if MVP decides to sell Maya, they will probably sell it at a a good valuation. But if they decide not to, or if he decides to buy out the rest of the shareholders, in Maya, it is still positive for Dell since, as mentioned earlier, it should start contributing to the overall profitability of the company after years of being in the red. And also as just a comparison to its competitor, Gcash, Maya will actually be faster in terms of achieving profitability, even though the market leader is Gcash. So why
Yeah,
tell this in our topics?
thank you, Bess. And sorry, just to go back on Ali, and maybe some of our viewers may be wondering why we prefer SM Prime over Ayala Land. And one of the reasons actually is in terms of earnings. I think when the pandemic began and the years went by, SM Prime continued to or consistently outperformed market expectations. And Ayala Land, I think they were only able to hit pre-pandemic levels just recent, while SM Prime was really much ahead. So on a toe-to-toe basis, SM Prime did really outperform Ayala Land on that point. And large part of that was mainly because of its small segment that really drove earnings forward, especially on its rental income. And I guess foot traffic was really better on what foot traffic was on their side compared to Ireland. It, uh, do we have time? Or, yes, okay. I think that's it for today, guys. I'm sorry to see a lot of questions, but I hope I think we will be able to address this in the coming weeks and maybe in our next Beyond Connections. And in case you do want an answer right away, please feel free to sign up an account with us. And we do have a Facebook group for our clients that whoever has a question, we are able to address it in that group. So I think that wraps it up. Thank you everyone for joining us today or spending your afternoon here with us. And thank you.